Hi, Estelle, you wanted to say something?
Oh, hi. No, I just wanted to say on other Zoom meetings, we've all been on camera, so I don't know if maybe it's just a setting or something.
Oh, okay.
I don't know. But I can't see anything for me to go on.
Yeah, it's kind of strange. I'll check up on that. By the way, can you guys see my screen?
Yeah, I can see you.
Yeah, okay, brilliant. There's the screen as well, right? Where you see where it says value investing webinar.
Yes,
Yeah, so
I
Yeah,
can
yeah,
see
okay.
that, and you are in a tiny little square in the corner.
Yeah, with an expensive painting behind me. Yeah.
Yes.
I wish, yes.
I have no idea. I've made no judgment on the painting.
Yeah.
If you say it's expensive, it's expensive. I
No,
believe you.
it's not. It's not. It just came with the apartment. So this is my new place in Malta.
Oh, you're in Malta.
I am, yes. And
Fantastic.
there are a few people here on this today, I think, who've joined from Malta. So that good to see that.
how did you manage to break your headphone?
I know, and the problem is, it's I've ordered it from Amazon, and it's on the way from London to Malta. So hopefully by next week I'll have it.
Oh,
The
is
scarce commodity.
Yeah.
my Amazon orders now are taking 2 weeks for delivery, so don't hold your breath.
Yeah, no, it's already delivered, luckily. So it's just the transport company needs to bring it to Malta. So.
Right.
All right. So I think we can get started. I think we've got most of the people here. So guys, welcome. I'm gonna put people on mute so that you guys can unmute yourself, raise your hands if you need to chat. So yeah, so welcome for any newcomers. Just all the disclaimers. I'm sure you've read them before. So please, what we are as a community. I'm not an expert. The idea of this webinar is kind of share ideas together. What my job is to kind of start the conversation. So please chip in. Please, ask questions. Please share your thoughts. This is how all of us can make the most out of this. So just a quick reminder that, we've grown quite a bit. So actually it's more than 6,500 now. Great to see that. For people who are not aware, we'll repeat this webinar tomorrow for our audiences in Asia. So a lot of people have signed up from there. So we're trying to expand this out as well. So I think this image has been shared quite a few times with a lot of different headings on the web. And obviously it's not a complete picture, because the week before this happened, we also had one of the strongest rallies from the 1930s. And then obviously, there is some kind of recovery expected, but I think no one expected the kind of recovery that we've seen. At least I didn't. Maybe some of you did. And so it's completely unfair to just look at this one image and judge. Hey, sorry, I'm gonna go on mute right now. Yeah, so yeah, but at this point, I just want to open up and get some thoughts before we move on of what people think has happened at this point. So unmute yourself and you can talk.
I think my view is that the governments are artificially propping up the financial systems.
Yeah, hi Baiju. Yes, that's one of the things. Yes, and we'll talk about that. What else?
Hello guys, can you hear me?
Yeah, George, go on.
So recently I defended my PhD thesis, especially on economic cycles. And as per Fourier analysis, this crisis was not, it can be skipped. So the financial markets, were quite overwhelmed. And I believe that coronavirus situation just was a trigger to break all the situation. There were a lot of overproduction in the world, and it was like as per Simon Kuznets cycles, we should have some small slowdown in economies, but this situation make this like say normal slowdown of economy put it at a critical level. So this is quite.
Thanks, George.
Myself.
Yeah, makes sense. Okay. Daniel, Rob, you guys wanted to say something?
From me, I feel the recovery will be fairly rapid, but it will probably be, there'll be a few bumps along the way. Fundamentally, there was nothing wrong with the economy. What we have to see is how employers react to this opportunity they've had to clear out their workforce.
That's okay. That may not go well with a lot of people, but okay. Yeah, but that's unfortunately reality.
That's the reality.
Yeah, unfortunately, yes. There's a lot of churn going on in everything, pretty much. Unfortunately, yeah. Daniel, did you want to say something?
Yeah, sure. I was just wondering whether maybe investors are underestimating the effects of the coronavirus and maybe using the dips that we saw like a few weeks ago, last week, to perhaps buy back in and buy the lows, essentially.
Yeah, so you think some kind of value investing came in after?
Yeah, exactly. Like companies are undervalued and they're just trying to get some bargains, essentially.
Sure. All right, makes sense. Let's move on. So at this point, just quickly, and it just kind of showing, it's nice to use these acknowledgements, a quick poll so we know who's here and what people think at this stage. So you'll be seeing a poll with 2 questions. You can just answer them, and then we can share it out for the group to see. Okay, we've got, maybe around 4 or 5 people left if they want to answer. All right, I think this is enough. So very interesting. Let me share the results. Can you guys see the results? So we've got a lot of people from 1 to 5 years. And then most people seem to be bullish and buying undervalued stocks. So that's interesting. Everyone understands what's going on. So, and wait and watch is also there. Cool. Okay. Any thoughts from anyone before we move on? Okay, let's move on. So, I mean, this is what we saw, and we use S&P 500 quite a bit. So, we saw that, we saw this. So this is a 1-year graph, and we saw this, obviously a big dip from whatever 3,400 for S&P 500 going down all the way to somewhere 2,100, and then now we are back at 2,800. So if you look at it, the dip actually from the peak is probably like 13% at this stage, which is, for a case where we're talking about, like people being locked down, people dying, like this is, I would say this is not a bad scenario for the markets at this stage. Any thoughts from anyone? Yeah, go on, John.
Can you hear me?
Yeah, go on, John. Yes.
What I was going to comment on that fall actually was that there was an interesting article on Market Watch a few weeks ago saying that the Dow Jones had pretty much fallen just as much as it did back in 1917 during the Spanish flu outbreak. And it also bottomed out way before the actual virus hit a peak. And that was about the 23rd of March, I think. So, I mean, that's where I started to jump in, actually. So there is some correlation there, if you look at the historical charts, as it were.
Makes sense. So you managed to buy something then?
Yeah.
Well done. Congratulations. Okay, fair point. Let's move on. So one of the other things I try to do is, and it's become a bit tricky now with the algo trading and all of that, is to look at the volumes and to see if, the jump that we've seen back, is it on high volumes? And obviously the decline, was a bit unexpected, and you obviously see volatility and high volumes. So you can definitely see that here. And then when we saw this, kind of mini recovery that has happened, the volumes were obviously lower, but they're pretty in comparison with what we've seen before. So there isn't much I can take away from looking at these things. As I said, volumes have been significantly affected because of trading, algo trading. But would love to hear any thoughts from anyone on this, or whether you've been using volumes to understand the market better. Someone raised their hands. 1 second. Yeah, Peter, go on.
Yeah, Rispa, obviously the big drop was very exciting for buying, but I didn't buy any yet. I'm still thinking there's going to be another one. I'm not sure if I'm being too cowardly, or the bad news has only just started coming through in some senses with more bankruptcies and stuff. I don't know what your thoughts on that, really.
Yeah, so we'll cover that, Peter, and I think it's not just you, but everyone's, I mean, no one knows for certain at this stage as well, so that's fair. Yeah.
Right.
Rob. Yeah, sorry, go on, Peter. Yeah, okay, Rob, go on.
Okay, it's an alternative view. I appreciate that the graphs can tell us a great deal about what has happened. I'm seeing some interesting things as a consumer, which would drive my investments at the moment. For example, whilst there are many losers at the moment, there are many winners. I spent several hours recently in the evening trying to buy something online from B&Q and Wix. I don't know how many people that are listening are familiar with those brands, but these are major brands associated with things that people will do when they're stuck at home. And there were queues on the website. I had to wait 10 minutes to actually view or browse a website. Now, clearly, they must be shifting a huge volume of product. And they would be, for me, a major target for investing.
Yeah, no, that's a fair point, Rob, and we'll cover some of these. Also, maybe Rob, as a tech person that you are, probably there are good opportunities to improve the performance of these websites and back-end systems, because
absolutely, I find it horrifying that you actually have to queue on a website for Glastonbury TV, but not for B&Q.
Yeah, fair enough. All right.
However, it's a function of, it demonstrates the demand that they are experiencing for product.
Yeah, absolutely. Yeah, we'll cover those things. Yeah, Rob. Okay. All right, let's move on. So yeah, this is a quote which is quite interesting, and I'm also given the time that we have, I've started reading a little bit more as well, and this is one of the quotes that I found. So you will hear a lot of times that the reason why value investors do well is because stock markets are not perfect. This idea of a perfect market, kind of what we learn in academic, is not necessarily true, because not everything is priced in. There are a lot of other factors, as we see now, that can affect the fundamental value of a stock or of a security. So I find this quote very interesting about that. But any thoughts on what people think, whether markets are perfect, they're imperfect? Anything on this subject from anyone? Okay. Oh, okay, two people. Ashish, go on.
I think, knowing about what I know of Warren Buffett, I am very sure, I'm willing to place bet on it, that he would have been buying significant quantities in late March. So I would look to see how once their results come out and filings come out, but I'm pretty sure he would have been buying, because he says, when it's pouring gold, he will go out there with a bathtub or something like that. And clearly there was so much of panic, right? I would think he would have been buying late March.
So I think, Ashish, again, and correct me if other people know more about this, what I have read in the press is that he actually sold a lot of airlines, which makes sense at this point.
He sold some shares in one of the airline companies.
I think he sold Delta, and I think even Southwest, I think it was.
Yes, and there are, as you would imagine, there are a lot of theories floating around on the internet why he would have done so. Obviously, they won't comment on it. But again, I don't want to speculate why he would have done so. What has not come out is, the reason why it came out is because his position changed from slightly more than 10% to less than 10%.
Correct.
Right? And that's why it came out. But we don't know what he would have been buying or selling otherwise.
Fair point. Okay. All right. Rob, you wanted to say something?
Just sort of anecdotal evidence. I can't say I have any.
Oh, sorry. Go on. Sorry. Sorry, I pressed Rob. Sorry. Can you unmute yourself again? Rob, sorry. Yeah, sorry. Yeah, go on.
Okay. It's anecdotal evidence. I have no statistics to back it up. But stock markets tend to react to negative news quickly and positive news slowly. So if you compare one against the other, so the fact that they took a massive hit is no surprise because of COVID, but I suspect the recovery as such will be much slower to take place.
Yeah, I mean, so yeah, we've seen that, right? The bull run takes quite a long time, and then, you know, the decline can be very, very fast and steep. And I think we discussed on the last webinar that no one knows, but recoveries could be of different shapes. People talk about V and U and W. So absolutely with you on that. Okay, let's move on. So another thing I keep reminding myself, you know, and I think given that, you know, a lot of us know each other from the meetups, you know, we have these different WhatsApp groups and private messages, and the common question that people ask is, hey, should I buy now? And when anyone's asked me that, my response has been no. And this is my personal view as well, is because there's a big difference between price and value. And so what we're seeing now is an increase in price. And for me, I haven't seen much value. So this is how can I differentiate between the two things and remind myself that just because something is going up, I don't need to dip my hands into it at this stage. So that's how I look at it. So why has the price been going up, right? And this is kind of, I've just put some ideas out there for us to discuss. Obviously, we know about the stimulus, the bailout packages, and the resultant liquidity, right? That has come through, and we're going to talk more about it. Another important thing is that a result of the recovery and the steep recovery that we've seen, and the fact that, you know, Fed and governments are ready to kind of bail out pretty much anything which is too big to fail, people have to cover their short positions. And at this stage, I think most people would be worried about taking shorts in this market. So we've kind of affected the I don't know what would you call it, but a natural way of, you know, letting the markets work by themselves by all the intervention we've seen. And the third point is obviously if there has been actually genuine buying that has happened at lower levels. So we don't know that, we can't figure it out. And obviously the last thing is also kind of, you know, I think Rob mentioned about maybe there are new ideas that we should be looking at. So kind of reallocation of, you know, what sectors you should be focusing on. So definitely airlines and stuff are, you know, difficult to buy now because, you know, we've been talking about distancing for, you know, maybe a couple of years now. It could go on for a couple of years. So it's going to be tough with those. So any other reasons that people think or they disagree with this list or anything on this from anyone? Hey, Rob, go on. Yeah, sorry.
Rose, it's more of a question about the first part, the price going up because of the bailout and the stimulus and so on. From what I've seen so far, it's still very early with regards to the bailouts in terms of things kicking in. That part of it is based on promises for what will happen over the coming week.
Hey, sorry, we lost you, Rob. Okay. Can other people hear me?
Yes.
Yeah.
Yeah.
Okay. Sure.
Yeah, you're good.
Yeah. Sorry. So Rob, no, that's a fair point. But let's wait. Are we going to talk about that a little bit more? Ashish, you wanted to say something?
Yeah, I think some of these points are correct. On top of this, I think there could have been FOMO as a factor, right? Where some people may have formed the view that they may miss a rally here. That also triggers some additional investors coming into the market.
Yeah, that makes sense.
And the
Absolutely.
other point that I want to make is, I think market is always forward looking, right? We should never forget that, because what has happened has happened. So IMF came out and said this year will be the worst since the Great Depression and will be far worse than 2009. In 2009, the global economy went down by negative 0.1%, but the markets that year, S&P returned 26%, right? So that's something that's worth keeping in mind. So I think the fact that 2020 will be a very crap year is known, right? So market is already looking forward 21, 22. And at these rates, when you start discounting, maybe, I'm not saying market is right, but I'm just trying to say why one of the reasons why market is going up is, yes, they're factoring those 21, 22 at very low interest rates and they see value. And the third point is, where else could you put money to work today, is also something which people will be thinking about.
Absolutely. And that's the point about liquidity, right? We've got so much money now in the system. And Ashish, just on that point, you're right. I mean, everything is forward looking, 6 months, 1 year down the line. But I think a lot of people might ask this question saying, if you go back and look at 2008, 2009, and, you know, when Lehman happened and all of that, Bear Stearns, you know, you saw some kind of decline in the market first, right? So it has to kind of be priced in. And if you look at from, you know, from February where everything was, you know, everything was great, we haven't seen that initial decline, right? Net, it's only 13%. So if that,
Yes, yeah, I agree with you. But at the same time, I think what has happened is some stocks have gone down 80%. And there are other stocks like Amazon, which have gone up 25%. So once you start moving away from indexes and start looking at individual stock performance, you will see a very wide variance that is somewhat similar to what we saw in 2008-9. Like the bank stocks really got battered down 95%, and some of the defensive stocks were still doing okay. And then as a function of that, the overall market came down 50%. In this instance, the overall market came down almost 30%.
Yeah, fair points. Okay, let's move on. So yeah, so I think going back to the point, Rob, that you were mentioning about, you know, whether, you know, these bailouts and stuff have happened, is it all done? As in, sorry, has the money reached? But we've started seeing, I think the market started rallying when they saw the Fed moving quite aggressively in the bonds market. And the scariest thing for me is when I saw them buying junk bonds, which is kind of a message to a market saying, you know, you've taken risk, you know, with these bonds, you know, very high yield bonds and you're making good returns. And now that things have gone wrong, we're going to support you. And I think that that was quite a shock, I think, to a lot of people that happened. Anyone else thought do people think it is justified in this scenario? So one of the views is that, hey, the virus was, you know, completely unexpected. And so we should be backing these companies. So, you know, what are the thoughts there from people?
I mean, if they're like high risk bonds to begin with, are they really that financially secure in the first place? Yeah, it just sounds like a big risk.
Yeah, and they've taken that risk, right? And now,
yeah,
you know, the Fed has covered the risk when something has gone wrong. So they're like, hey, and the message to market, hey, we should be taking more risk because if something goes wrong, you know, we're covered.
Mm.
Yeah.
To me, this is fundamentally different from what Fed did in 2008 and 9. I think, and obviously this will get debated for many months and years. But this is a very significant move, what Fed has done by announcing that they are going to step into fallen angels. Because in a way, and I think some people are already talking about it, in a way, Fed is removing the fear of bankruptcy, right, from some of the clients. Now, is that really their job? We don't know, but you know, this has clearly triggered a massive risk on feeling for a lot of traders and investors. I was reading just now, I myself, I work in a bank. So Marriott today issued a bond. They, as you can imagine, not many people are staying in the hotels or are unlikely to stay. And for a $1 billion bond issuance or $1.5 billion bond issuance, they had an order book of more than $20 billion. So this is what the Fed is doing, which I don't know how it will play out, but clearly a very different playbook to what they used in 2008-9.
Yeah, absolutely, Ashish. Exact same feelings from me as well. Okay. So, we looked at, and I think we talked about this in January at our London meetup, and I think maybe even in Malta, that if bailouts come in, hopefully as a taxpayer, I hope that, they're not just free giveaways. And so what we've seen now is the news that has come out yesterday and today, which is airlines are going to get some bailout money, but not all of it is grant, right? So I think 25-30% of that is in the form of warrants. And I don't know the exact term of the warrants, but I would think these are some kind of options from the government to, maybe exercise those warrants in the future, which basically means that if you're owning airline shares, I mean, you're getting some money, but you're also, the equity table is getting diluted. And so that should also impact your stock price. So I was actually kind of happy to see this being done, because a lot of places this has not been done. And just giving out free money to businesses is not the right thing to do, I think. Or I don't think it's the fair thing to do, because, who decides who gets how much? We again discussed Boeing quite a bit, because, I was lucky. I was short on this stock before going into this crisis. And it was quite interesting to see from the CEO saying, hey, we want bailout money, but we will not give a stake to the government. So we basically want free money. And I think what it came across when I was listening to them and reading about this was, hey, if the government doesn't give us money, there are a lot of jobs at stake. So it was almost like blackmailing the government with the bailouts. And anyone has any thoughts on these bailouts and everything that's going on right now? And who gets bailouts and who doesn't, those kind of things. So go on, Peter.
I'm muted.
Yeah.
Yes, obviously it's pretty unpopular, isn't it, for people that pay their tax offshore or have still got billions in the bank to be getting bailouts from the taxpayer. So it's a political minefield. But I quite like, I mean, these guys have got balls saying that they're rejecting the government ownership. That's quite funny almost.
Yeah, absolutely. I mean, we've seen this in the UK with a lot of issues. I think in general, I think when I look at the government talking about these things, I feel like, and obviously the Fed and obviously these are kind of qualified people, but in general, people don't necessarily understand how businesses run and, what are the differences, in supporting a massively profit-making company, which is too big to fail, compared to a startup, to a self-employed person. So absolutely, I think completely agree with what you say. I mean, these companies have shareholders, who are billionaires, but none of that money actually comes back in. And I can understand, right, from the billionaires' point of view, if there is free money to be taken from the government, why not? Sorry, we're very. Yeah, so this is kind of my view as a startup and an SME, and I'm a little bit frustrated with the governments. So, I run a business which is City Falcon. We had a team of 39 people before going into this. We are, close to 31. And the frustration for me has been that it's very difficult to access any of the schemes that governments have, because most of the schemes are supporting, the markets, buying bonds, or, there's some news about how hedge funds are claiming bailout money because they fit into the criteria of having less than 500 people. And then they might have to make some people redundant. So they're getting access to money, while SMEs and, smaller businesses are not. And even, consumers who we look forward to kind of spending, they are not the ones that are getting the money so quickly. And this again puts the issue back into about the fundamentals about the market. If all the money is going to these, banks, hedge funds, the rich people, they may not actually spend enough to kind of revive the economy. So yeah, and yeah, as a startup, I've applied for loans to my bank, and again, it's the same question saying, hey, but you're not a profit-making company, so why should we give you a loan? And at the same time, it's the profit-making companies that actually get the loans, which is quite interesting. So I'll stop my rant, but any thoughts from anyone? One second, someone. Sorry guys, you have to bear with me because this one, yeah. Right, go on.
Can you hear me?
Yeah, we can hear you. Go on.
All right. Yeah, no, I think as an SME startup owner, I can definitely sympathize what you are saying. As a value investor, it's actually also interesting whether you can also take advantage of the fact of bailouts and so on. I think I was asking you actually in the last call about airlines and so on, and I think your advice was actually I think a fair advice. You don't touch them, but I think what was quite interesting also is that it's kind of how politics comes into it. This election year, they employ hundreds and hundreds of thousands of people, and how can you actually find companies who are in a very bad position, but the government just can't let them go under, who are then very, very poorly valued. So yeah, I think it's quite an interesting thing also from the value investor point of view, how you can actually benefit potentially from it as well.
Yeah, absolutely. I agree with you. Yeah. And again, we don't always know how these bailouts, what form it's going to take. So it's very difficult to judge beforehand.
Yeah, absolutely.
Okay. Any other thoughts from anyone? Yeah, Siddharth, go on.
Yeah, I just wanted to echo your thought, and I've been hearing about from both business owners as well as those guys who work in banks, and what they tell me exactly that they're in the same position. It's hard to get access to these loans, especially for small business owners which are not making a lot of money. But from bankers' perspective, they say that this is the time when they have to shore up their balance sheet as well. They have a lot of banks are already seeing massive losses or bankruptcies or expecting them to come through. So they are not willing to take any risk, and even if they have liquidity, they don't want to give it away to risky enterprises, and just would like to rather keep it with them. So yeah, I mean, that's the perspective that I'm hearing from guys who are working in the banking sector.
Yeah, absolutely. I mean, just to share my experience with, so I'm discussing with a major bank in the UK for a £250,000 loan. So as per the scheme from the government, if it's up to 250,000, I do not have to give a personal guarantee, and the banks and the government gives 80% guarantee towards the loan. But still, these guys actually want to dig deeper into my bank balance, trying to figure out if I have enough money, which was, completely not required, as a limited company. So a really frustrating experience. Still not over. We'll see if we end up getting the loan or not. But at this point, I am not betting on it.
True.
Yeah. Anyone else? Okay. Oh, sorry, Rob, you want? Yeah, go on. Yeah, Rob, go on. Rob, I can't unmute you for some reason. Can you try unmuting yourself?
Unmute now.
Yeah, go on, yeah.
In the years that I've been in business, Russ, just to pick up on your point about banks loan money, they don't take risks. That's the nature of the beast, and we shouldn't expect them to suddenly do it now, whether we want them to or not. Governments like to pretend that they will support businesses, but they don't really. They hand the buck over to somebody else. Businesses have to stand up on their own 2 feet, unfortunately. At the higher level, bonds, etc., sure, they step in, central banks step in and take care of things, but the SMEs and everybody else beneath them, we just have to get on with it.
Yeah, Robin, I think the question that was raised by the fintech industry in the UK was, why is the government still giving money out to these banks then? Maybe it's an opportunity to get fintech involved, to dispersing out loans who are more risk-taking.
I would love to see it different, Russ.
Yeah, yeah, fair enough.
I'd love to see
Okay.
it different, and you're absolutely correct. It's just there's a huge gap there, and I don't think that will ever be dealt with by a government. There are too many SMEs. That's part of the issue, I think.
Yeah, I hope it changes, Rob. I hope we'll see.
So in terms of banks, maybe I can mention a couple of points quickly. As a banker, I feel I should defend my institution. Banks are going to take significant losses. I work for a European bank. I have seen my counterparts in Asia and also in America. They're all taking significant losses, at least in this quarter. You can see it from the provisions. I think what banks are asking regulators now for is to relax the liquidity constraints that they have, the capital constraints that they have. What will likely happen, in our understanding, is some of the weaker banks could get in trouble. There's a serious risk in the industry. We are already seeing flight to quality within the banking sector. So you may have seen, like for JP Morgan, their deposits went up by like 25%, because people are actually moving money out from some of the weaker banks. That is also playing out. I mean, good or bad, banks do play a very significant role in the functioning of the global economy. If one of the big banks were to go down, that would actually pose much more bigger risk to the economy as against, let's say, a Boeing or any of the other large airline companies.
Yeah, the too big to fail argument always comes in, right?
Yes, and there's a moral hazard, and for that banks have paid, right? So in the sense that banks are being asked to hold more capital, and as a function of that, their ROEs have gone down. So none of the European banks earn more than 6, 7, 8% return on equity. Some of them earn less than 2%, 3% return on equity. Some of the American banks also had to face through the same thing. So it's not that the banks were in a very happy place before this. They were forced to hold a lot of capital, and some of that they are going to drop as a function of this crisis.
Yeah, fair enough. Okay. All right, let's go on. Yeah, so this is just came out, which is, it's not only that the companies are asking for bailouts, it's also the governments and countries. And so we are seeing, I think with the dollar, for some reason, it's always strengthening because it's the global currency. But if you are running, a smaller currency and, you're printing more cash, you're going to be punished really harshly by the markets. And so I think, bailouts of governments, and, there is a risk of, some kind of sovereign debt default that might happen, that again, this is too big to fail in a kind of interconnected economy globally, could again pose more challenges. So just going back to the point about, and most of us understand this, there's a macro risk and there's a micro risk looking at the companies. And with all of this, and even what Ashish said earlier with, and what we saw with junk bonds being bond is, the government's removing, a part of the risk that you would take as an investor. And so this is a kind of a risk on kind of, go long, there's no point shorting at this point kind of view, which is what it is. So right now we're in a situation where all you need to focus on is in the stock and see as a company whether they can survive, what are the opportunities, and then the market risk, the macro risk doesn't matter. And it's an unfortunate situation to be in. Yeah. So one of the things, again, we spoke about this last time, we look at VIX, which is the volatility index or the fear index. And this you can look at from a hedging perspective, or just to kind of see, what people are doing. And we've seen a massive decline. Obviously, some of it is because, short covering is happening, the market is going up. So in general, the volatility has come down. So less people are buying. For volatility index, what is important is out of money puts and calls, and this, people have kind of stopped. The speculation is less, the volatility less, so it's come down. I'm just looking at it now in the markets, and I think it's gone up slightly, but still much lower than about 80 that I saw. So I play, so I have a bit of a trading portfolio, and I play in VIX at times, and I actually saw I think I discussed last time. So I was short at about 60, and then I saw it going to 80, which was a bit of a unexpected move quickly, and then it came down, so I could make a little bit of money. But this move from kind of 60 to 80 was pretty quick, and I saw that happening very fast. And any questions on VIX? By the way, we've just published a blog post on VIX. If you want to see on City Falcon blog, you can read more about it. Any thoughts on this? So one way, if you want to, for example, not investing, sorry, this is kind of speculating and trading. If you were to kind of think about, okay, you think you're going to see more volatility, you see something might go wrong, whether it's bankruptcy or whatever, you could be buying VIX. Though, as we discussed earlier, with all the support from the governments, maybe not a good idea at this point. I would probably, my trade would be probably if it goes up to around 70, 80 again, I might take a short position on this. Anything on VIX before we move on? Okay. So we talked a little bit about sector reallocation. And so what I did was for S&P 500, and again, you can do it for the other indices, other countries. I looked at how the performances have been. And so if you look at, let's say, if you look at a 3-month period, right, we've seen a big decline in the industrials and then energy, obviously with, with oil falling as much as it has. Financials has also seen a big dip. And the ones that didn't see a lot of, down is your consumer staples, I'm guessing because of online shopping, obviously healthcare. And then now we've seen, big recovery. So if you look at from a monthly performance point of view, consumer discretionary is up quite a bit, 11%. And then again, materials is up. So I'm sure there's a lot of data for everyone to kind of see. But any thoughts on this? Sorry, Rob, go on, yeah.
Oh, sorry. Moving on, Rose. Sorry, I've forgotten the point now.
It's okay.
It's from your last slide.
Okay. Yeah, let us know if you remember again. So yeah, anyone else, any thoughts on the sector performance? Things have been changing, more people on the internet, buying online rather than going into stores, entertainment, any of these things. All right. Yeah, Rob, did you remember?
Rose, anything to do with video conferencing, group meetings, chat, remote working?
Yeah.
You're referring to Zoom?
Yeah,
exactly.
Yeah, no, I've seen that massive increases in that stock for sure. And Slack as well.
Yes.
It's funny if you see the top 3 sectors after 3-month on the 3-month performance chart. Consumer staples, the stuff you need to eat in case you fall sick, healthcare, and technology. Everything else has been rubbished pretty much.
Yeah. Right. So, one thing, I mean, kind of, Rob mentioned this earlier as well, is to consider is, what changes are we going to see in general? And some of these are temporary, some of these are permanent. And even as someone who runs a business, like this is super important. So one, we are seeing obviously increased tech adoption, right? So people who are like, hey, I'd rather meet with people in person, have now started downloading Zoom, using Slack and using other softwares to start, and people are becoming more tech savvy, which is good news in a way for businesses like, high-tech businesses like ours. Also, I think as this kind of changes, maybe you might go out and appreciate being outdoor more than before. So while in the short term, you might see a boost in, entertainment and a lot of other things, maybe in the medium term, things may change. And obviously a lot of this is not only for consumers, but also businesses. So businesses that we're talking about, hey, everyone needs to come into the office at 8 a.m. and start working, now are seeing benefits of, remote working, being close to their families, all of that. So just wanted to hear from you guys, what are the changes that you think, that we should be looking out for? And once we know these changes, we could identify opportunities through that. So what has changed for us, or what will change for us? Yeah, go on, Daniel.
One thing I would just like to say is a lot of companies are probably going to be shifting to work from home. Another company that I work for, big US tech company, all of the staff now working from home. And that wasn't really the policy before. We're using tools such as Slack and Zoom. And now a lot of the managers have actually seen the benefit for people working from home. Another thing you said about being outdoors and appreciating. Another thing is appreciating your health and fitness as well. I think that's an area which has been highlighted for a lot of people. So the home workout, fitness products, everything like that, that's definitely seen a boom. I know you can't order weights or anything like that online right now.
Yeah, so Daniel, you say that, and I just ordered a home gym for myself. It should hopefully be
Nice.
delivered this week because, I'm saving on the gym membership. I don't think I want to go back to the gym with, all the sweaty people.
Yeah, exactly. I
Spreading
think it
germs.
opens up home workouts for everyone. So
Yeah,
definitely a sector which hasn't seen much interest before.
Yeah, John, go on.
Looking ahead, as it were, whether we're likely to see an increase in inflation, and whether it would be, advisable to start moving into stocks, or areas that benefit from inflation because of all the money that's been put into the machine by the governments. And leading on from that, I was wondering if anybody has any views on how they're going to start recovering some of this money, actually.
Yeah, it's a very good question. So I'll let anyone else, anyone has thoughts on everything that's going on with inflation? Okay, I mean, I can start with my thoughts. I mean, John, it's interesting, and I think it's how you kind of define inflation. So if your basket kind of includes oil has come down steeply, so that will obviously affect, help, industries, help consumers and everyone keep the prices low. And then at the same time, labor costs have gone down. So for businesses like ours, where a while back in February, unemployment was at historical low levels, and when I look to hire someone, people are demanding crazy salaries, and suddenly I'm seeing a big decline in that. So that obviously helps us. But the question is also around, as you said, it's the additional liquidity, the additional money that has been pumped into the system by the Fed and everyone else.
Yeah.
So I think I know the factors. I don't know which way inflation will go. I think what central banks have been saying is trying to avoid deflation. They want to keep inflation low. I mean, interest rates are, as you know, are significantly, we've seen some, interest rate cuts from a lot of countries. But I don't know what the net impact of all of this would be. Anyone else, any thoughts on inflation? It's a very important point. Yeah, go on, unmute yourself, guys, whoever wants to speak. Yeah,
I think my view is if oil goes from $20 to $60 a barrel, that's like 300% jump, right? Or more than that. So that itself means inflation on an year-on-year basis. The question is how quickly it will go and whether it will go to $60 next year or it's going to take 5 years. I think the other point, which is coming back to behavioral changes, is definitely we will see a drop in consumer discretionary purchases. I can't imagine people coming out of this lockdown, irrespective of which income group they are in, suddenly making large purchase decisions. And I do have a feeling that because of where the inflation was before the crisis hit, the central banks thought they had room to actually pump in more liquidity without worrying about inflation, because the risk was really on the downside or deflation in the short term. That's what I think is my view in terms of short term. I know a lot of people are talking about inflation, but if in the next 1 year, people are going to be very cautious about where they spend their money, then I don't see where the inflation is going to come from.
Yeah, and I don't know if you guys saw, but Apple just announced a $400 iPhone, which is quite interesting for Apple to do. Yeah. John, did you have anything else to say on this?
Well, I mean, everybody's in a state of shock at the moment with this. But inevitably, if the governments are putting in, huge amounts of money to oil the system, there will be some inflation.
Yeah.
There can't be.
Yeah,
But,
I guess
it'll be longer term.
Yeah, I guess the one thing that I'm struggling, with these things is I don't see an easy way for the governments to unwind the stimulus, right?
No.
How do we, yeah. And again, maybe interest rates increases, but then again, it affects the economy. So you're right. So yeah, it could happen. Yeah. Siddharth, go on.
Yeah, I'm just wondering, how the helicopter money is going to play out, and how many governments are going, or central banks are going to use it. We have heard it from the US, and that's an instrument that they did not use in 2008-9, and because perhaps the challenge that they were working on was very different. Today, with this COVID-19, we could be looking not just to rescue banks, but rather to rescue personal bankruptcies. And for that, if they decide to use more of helicopter money, and not just the US, but also a number of other countries around the world, especially developing economies where there is a large, much bigger population working in the unorganized sector, to which these loans would not reach anyways. So, and there, if governments start to use helicopter money, or start to run big fiscal stimulus, then that will impact inflation, because that will give money in the hands of consumers, and a lot of low-income consumers who are going to go out and spend. And of course, oil plays a big role in inflation.
Yeah. I mean, I think there was this theory where someone talked about, hey, we're doing so much stimulus. Why not, in the US, for example, whatever number of people, 300 million people, why not just give this money to the consumers instead of giving to the banks and businesses? Was a theory also being considered. But yeah, so that makes sense what you're saying. Rob, go on. What are your thoughts?
There's a future, not norm, but it will change the balance, the way that people work today. And so more people are working from home in the future. If that's the case, I accept the facts from, I'm not sure who it was, Ashish, I think, who was pointing out about oil going up. Fine, it will go up. That has a negative impact on inflation. An increase in inflation. But consumption will go down, because if you're working from home, we're not driving. We're not taking buses, we're not taking trains. Consumption will go down, which will balance that inflationary effect. So I don't see any real pressures on inflation in the longer term, because it looks at the moment as though habits are going to change for both business and consumers. And there will be a general easing of driving, transport, all sorts of things.
Yeah, so I think, Rob, the question then, as we discussed about the behavioral change. So for example, people shopping online more, food being delivered home. So do you think the spend might be shifted and may not be reduced?
Yeah, I mean, there's going to be a shift. A lot of people have now become very comfortable with and aware of doing things differently. And I can't see how people will simply return back to what they used to do.
Yeah, makes sense.
We're now all using Zoom and so on. All of us won't stay using it. Some of us will drift back to the old way, but there's still going to be 10, 15, 20%, 30% more people doing it this way than how we used to do it. And that will continue. So I don't see that. I think there's going to be some big changes in the fundamental way that people are behaving in certainly the advanced economies. That offsets a lot of the inflationary pressures. Plus, and maybe somebody here is more knowledgeable in this area than me, if all central banks, the major ones, the US, the UK, the European, and so on, if they're all printing money and they're all doing it, how does that create any negative impact one against each other? Because they're all doing it.
Yeah, and this is where I think, yeah, no, absolutely. And I think I wonder about these things as well. As I said, I'm not an expert again on this, as I said, the smaller economies might struggle. So, smaller countries, because when they print money, it will fall against the dollar, and then it affects their ability to import stuff. But yeah, the bigger currencies, it's a good question, especially with the dollar. Just because whenever everything goes wrong, people start buying dollar again. So it's like dollar always goes up. Ashish, you had a thought? Go on.
Yeah, no, just on this point, from my limited understanding, it doesn't really matter what the what the Bank of England does or the ECB does, dollar remains the reserve currency, 70% in terms of overall currency distribution. So what really matters is what Fed does, which drives global inflation, because all the commodities in turn are linked to dollar.
Yeah, absolutely, absolutely. Yeah. So yeah, if you're trading in commodities, you have to constantly look at the dollar and how that moves. Okay, so let's move on a little bit now. So to the companies that have done well. So Amazon, obviously, it's been a phenomenal time for them. The jump to 22% jump in the last 3 months compared to Nasdaq, being down 8%, which is still not bad given the circumstances. But yeah, just a massive jump. And I think most of us are shopping online, and Amazon was one of the best equipped to kind of manage demand, and even they are struggling. So the smaller ones would definitely have a tougher time, but yeah, it's phenomenal for Amazon. It's one of my regrets of my life, which is I didn't buy Amazon before. Like, I don't usually look back at these things, but a phenomenal journey for them to where the price is now. Any thoughts on Amazon?
I think it's quite an interesting time for them, for sure. I mean, not only is demand growing, but probably people are really shifting still to e-commerce. People who used to shop on the high street and so on, they can't do that anymore. All of their competitors from that world are getting really really crushed. So it's kind of increasing demand, and many of your kind of historical competitors are really getting crushed. So it's really an interesting time for them.
Yeah, and also I think from their perspective, they're also trying to take over the living room with Amazon Echo, Fire Stick, all the devices that, basically they want to control your life, and they've already become like a default place for a lot of people to just shop from there with Amazon Prime. And then I just subscribe to their Kindle Unlimited, which is, pay something like £9 a month for unlimited access to books. So yeah, they're pretty much taking over our lives. I think, yeah. So again, as value investors, we need to look at some numbers. So not a detailed analysis, but I was just curious about, the consensus for 2021 was, $40 EPS annual. I'm guessing it'd be probably higher now given where Amazon is. So, the stock trades at something like 45 times now. And so, if you think that the company can grow 45 times from where it is now, it's probably a good buy. But if you think it's not going to grow 45%, again, 45%, sorry, not times. I think the thing with Amazon also is that a lot of the products are not necessarily that profit making, because they sell a lot of things at close to cost. But as they get scale, they might be able to increase prices. They might be able to, increase their margins. And again, that could help the stock quite a bit.
I guess what could be quite an interesting analysis to look at would be to look at someone like Alibaba and see how they did during the SARS epidemic, because my understanding is that they actually started doing phenomenally well back then in China, when everyone was kind of in the same situation. You didn't want to go shopping because there were viruses everywhere, and obviously Amazon is now kind of in a very similar position. So it could be quite interesting to actually compare those two.
Yeah, it's a good point. Yeah, I mean, if anyone wants to do it and share at the next webinar, that'd be great. No, that's a good point. Yeah, Rob, go on.
Yeah, that's a superb point about Alibaba. Comparing them with Amazon could be very interesting, because Amazon, for all of their giant size, still can't cope with what's going on today. They've actually had to cut back on many products that they used to ship to make space for the ones that are in such high demand now. So even with their sheer volume of capacity, cannot cope. So this extra demand that's been placed on them is outstripping their capability. They've got so much demand to grow right now, and they can't cope. I'd love to know what's happening with Alibaba. Are they having the same problem?
Yeah, so I don't have an answer. I'm not tracking Alibaba, but if anyone else does now, or if anyone wants to share an analysis later, that'd be helpful.
No, I was just thinking about it on companies like Ocado and Amazon and so on. I guess the constraining factor is really that you do need some warehouses somewhere, and for Ocado you need these cold trucks and so on, and you just can't buy hundreds and hundreds of them overnight. So I guess that's why probably everyone is struggling at the moment. I think longer term obviously can fix it quite fairly soon.
Yeah, the meeting demand is the issue right now with the supply side of things. Agreed. Yeah. All right, let's move on. So the next talk is kind of, as everyone would expect, it was kind of Netflix, and we've seen it, reaching an all-time high, phenomenal jump. Obviously, people are spending more. Also, we discussed last time that they allow people to share passwords, and so multiple people in the house are using the same password, but that could change in the future. So people think there's an upside for this. I think, I guess the one downside in the given scenario is that they're probably not going to be able to launch a lot of new original programming for some time. So that might have some short-term impact in terms of, I don't know, if people running out of things to watch, at least original content. And then obviously there's more competition with a lot more players from, HBO, Disney, Prime. So anyone has any thoughts? Yeah, Ashish, go on Netflix.
I think that's good for their free cash flow, which is why the stock is going up.
Yeah, so I mean, I guess it depends on how you look at it, right? So if you look at it as an expense, then agreed. But if it was an investment, then it's also affecting future cash flows, isn't it?
Yeah, no, I was just kidding.
Okay, all right. Okay, I wasn't sure. Okay. Anyone else on Netflix?
I think it's again maybe interesting to look at the wider landscape. I was looking at Disney, for instance, the other day, and they're obviously they do have a portfolio of all kinds of things. I think the Disneylands are obviously not being visited at the moment, and that's probably why they're at least suffering quite a lot. But they are also starting to compete more and more with Netflix, and they look at least way cheaper than with Netflix. They look way cheaper than Netflix, so it's an interesting stock at least to follow.
Yeah, fair enough. Okay. All right. Obviously Zoom, everyone's been looking at the stock. It's been in the press. The founder is, I think he's worth $4 billion now. And the stock has done, something like 93%. But we did see a decline recently while the markets were going up. Any thoughts why this has happened and whether this will continue with Zoom? Yeah, Charlie, go on.
I was just going to say, I was reading it, there were some privacy concerns around using Zoom. And I know the company I work for is actually not allowing us to use Zoom because of these concerns about it being some data security issues around Zoom.
Yeah, exactly. It's one of the points. Yeah, Daniel, go on.
Yeah, sure. So with Zoom, as long as you have the link, anyone can essentially access it, unless you put a password in it. So if that email gets shared outside the organization and it's just got a link, you can join that meeting. Another thing is there's no end-to-end encryption. I think they weren't ready for it to take off like it has.
I think
they never put that in.
Yeah, I think from 10 million a day, I think they went to something like 200 million.
Yeah,
which is a phenomenal. Yeah, Siddharth, go on.
Yeah, I was just saying that alongside the news about security concerns with Zoom, what has also coincided with it is that the way Microsoft is pushing their MS Teams, and I see so many companies, pretty much every other company where I'm talking to people, they either have started using MS Teams on a more frequent basis, or they are moving to MS Teams. So that's phenomenal because it has so nicely coincided with the decline or in Zoom, or with the with all the negative press coverage about Zoom. So I'm just wondering whether Zoom is gonna sustain these kind of volumes, especially in corporate environment, or would it be taken over by Microsoft, who would be the eventual winner?
That's a good point on Microsoft. They do keep buying these things. Yeah, makes sense. Yeah, go on. Ashish, you had a point on this? Yeah.
No, not me.
Okay. Sorry, I need to lower everyone's hands then. Sorry, did anyone else wanted to say anything on Zoom? Okay. So yes, I think privacy has been an issue. Also, I think there were a lot of racist comments against the CEO because he's originally from China, and I think there was quite an interesting story about. I think his visa was rejected maybe 10 times by the US, and only then he could manage to get into the US. And then he worked for Cisco, WebEx, which is a competitor, for some time. And then after he used to work for WebEx, and I think it was bought by Cisco. And then he started Zoom. So I think those concerns were there. But I think with all of these things, having worked for Skype and Microsoft before, pretty much every technology, or every big player has some issues, with Facebook selling your data, or your cameras on your computers being accessed by other people. So these issues are there. The question is whether these issues will remain in the long term. Having said that, the stock is not cheap. I think last I checked, it was close to, I think, about $50 billion, if I'm not mistaken. To check the numbers, but yeah, so it's not really cheap at this point. And I think Siddharth's point is quite interesting about an acquisition, given the user base that it has, given what it has. I mean, even someone like Google or someone could be looking at this, or even Facebook, for example. So these are all possibilities. I would not be personally buying Zoom at this point. So just a bit of a plug, if this is our platform, City Falcon, you can actually track all the stories that are coming in on a real-time basis, on a relevancy basis. So you will not miss out on any of these stories. So yeah, so you can see that they hired an ex-Facebook security chief, and then Google banning the software. But again, it was strange that Google employees were using Zoom when they have their own Google Meets or Hangouts. And then yeah, it's being sued, and the passwords being sold. I think the challenge was that Zoom IDs were pretty much a long kind of integer, right? And so people were guessing, and people were what is called Zoom bombing, just just typing in numbers and getting in. It's like as a kid calling random people on the telephone, pretty much like that, because that 200 million people are going to be online on Zoom, which is crazy. Another stock is Slack. We keep discussing this. Charlie's favorite, I think. So it has also come down a little bit after the jump, and this is one stock that I'm personally tracking quite a bit because I'm a big believer in Slack. So any thoughts on Slack from anyone?
I was looking a bit at them a couple of weeks ago. I think my assessment was that they seem to be fairly valued at the moment, given the product that they have and where they'll probably go with that. I think that for me, at least, the big question was, can they expand somewhere else? Can they, let's say, build the next Zoom or next something on top of it? And I think if they can, they have, of course, a massive user base, and there could be a lot of upside. I didn't quite figure out yet what that could be. Any thoughts on that?
Yeah. Okay. Let Rob go on. What do you think?
Rose,
yeah, go on.
I've been using that as well on our project. We found it fairly lacking and needed something like Jira to actually make it really useful. But I've also noticed, in terms of going back to comments about Microsoft and Teams, can't say anything about the product, I've never used it, but Microsoft are annoying me in Excel every day because they keep pushing and putting prompts in my Excel about using Teams. So I suspect that both Slack and Zoom are going to suffer long term by Microsoft's dominance of the desktop in Excel and Word and so forth, and they're just going to collect customers over a longer term. And while Slack and Zoom are benefiting right now, and that's brilliant, I suspect they're going to lose long term.
Yeah, I mean, having worked for Microsoft and used their products, and having used Microsoft Teams, I think it's a really poor product compared to Slack. Rob, we should have a discussion on how you're using Slack. We can probably find better ways.
Maybe.
Yeah. So generally, I mean, we are really satisfied. I think your point earlier about whether Slack could be doing other things like Zoom, and the valuation is pretty much significantly lower than Zoom at this point, even though Slack has a more engaged audience. People are using it's a necessity in your organization at this point.
Slack with Zoom is a really good idea. And Slack is more useful from my point of view than Zoom. I don't want to give the idea that it's not a good product, because it is good. But in terms of what it could do, it could use Zoom functionality. But it actually needs to take over sort of space that's controlled by people like Jira and project management systems. And that's where I think Slack is lacking at the moment.
Yeah, fair point. Okay. Daniel, go on.
Yeah, sure. So with Slack, it's much more than just a messaging system as well. You can actually create Slack bots, which can integrate with APIs all over the web. So you can get information such as employee schedules, which is what we use it for. You can tie it in with your infrastructure as well. So let's say if you've got servers going down, you can actually get messages to pop into Slack. So to alert infrastructure teams. There's a lot more that can be done.
Yeah, it's a very developer-friendly platform. Absolutely. Yeah, that makes sense.
Yeah, good point.
Yeah. Charlie just shared a link about a Slack and Zoom partnership. So, okay, that's interesting. So they're not competitors, at least for now.
Yeah, it makes sense.
Yeah, no, absolutely. I think with APIs and integration, we in our team at City Falcon, we use, Slack is integrated with, Jira, and then, if you have a Zoom integration, it's perfect.
Well, to be honest, on that point, the project that I'm working on, we've identified Zoom or a Zoom-like product as something we'd want to integrate into our product. They have an API, and that's what they'll do, so we could. So that there are opportunities there for Zoom to collaborate with plenty of other products.
Yeah, makes sense. All right, let's move on. So again, if you want to track what is going on with Slack, Microsoft Teams, or if you've never heard of Slack, you can track all of these things on our platform. The thing that, we keep sharing every time is, kind of this idea of where the markets are and for you to decide where we are. So historically, we've seen bull traps wherein there is a dip and there is a jump up. Actually, the graph looks, very similar to S&P 500 at this stage, but it could also be that we are here. And so, the upside is from here. So it's totally up to you based what you think where we are at this stage. So, I mean, just going back to this, the conversation that we started about price and value. Is there value is the question, as a value investor for me. And for me right now, there are uncertainties for me to actually buy. And again, it could be a thing where there might be some ideas, some things where you think, okay, I can take the risk and it could recover. And, Ashish talked about oil, and my trading portfolio, I play a lot with oil as well. So I think most people believe that oil will go up again, right? Once this demand supply issue is solved. And so it's just a matter of time. So if you are patient enough to hold it for a long time, you could be making money. So I will continue to play in oil, maybe buy futures there, but other things I'm not so sure about. And also I think, we talked about stimulus and then kind of, how does it work, after, can they actually remove the impact, which I'm not sure of. So all of this liquidity, trying to suck that liquidity out and what impact that will have on the business. So I'll pause here. Any thoughts on this about, value, any other factors that you would consider? So ignore the price of things that we've seen, but just focus on value. For example, you could be saying, hey, the price earning ratio is really low for some of the companies, as long as you can, estimate the earnings in the future. Or we looked at last time, we looked at, how much cash do companies have on their books? And again, you can compare that to the price. So there's a question from Peter, how do you buy oil? Peter, so, I have a more sophisticated product, so I can buy it as a commodity. I wouldn't want to buy company shares because then you're taking company level risk with oil. But any broker that supports trading in commodities, you can do that. But please be careful, these could be margin products. So, you could lose a lot more than what you deposit in the account. It's not as simple as shares. Yeah. Any thoughts on this, on value? Or is everyone only focused on price movements right now? All right.
I think there's definitely value, if you start looking at balance sheets of the company, I think, I mean, you should always look at balance sheets of the companies that are there in your portfolio. But this time more than ever, especially in terms of things that you're looking at are short-term liabilities, so less than 1 year of payables, bank borrowings, and what you have on the asset side in terms of near-term assets and liquid assets. Once you do that, then I think you can figure out run some scenarios on zero revenues, 50% drop in revenues, 25% drop in revenues, and from there you can start looking at what is getting more attractive.
Yeah, absolutely. So you're kind of doing some kind of scenario analysis, right? Like, and the worst case scenario, if the company would survive or not with that. Yeah.
Yeah, I mean, I can talk about like Disney, for example, something that I had bought a year and a half ago. And it's pretty much down to the same price that I bought. And I can only talk in scenario terms. So there is certain scenario in which the company can work out fine, and there's a scenario in which it will go bankrupt, right? So, for example, the earnings that they're going to lose on parks is massive, and then you have to, as I said, build scenarios on when do you expect people to actually start going back into these parks. When do you expect people to start going back into movie theaters? When do you actually expect live sports action coming back, right? And you can only work off that. I think the market today is pricing, in my view, things will be back to normal in 3 to 6 months time. I don't know if the market is right or wrong, but it's just a scenario that market is pricing.
Yeah, agreed. Yeah, the parks thing is quite scary for them. Yeah, Siddharth, go on.
Yeah, I was just going to say that, so often when I look at some of the stocks that I'm interested in, I just feel that can they survive this downturn with the money that they have, or the cash that they have, the balance sheet that they have? Is it strong enough to get them over to next calendar year? Because so often I end up thinking that, okay, imagine it was 31st December 2019. Exactly same time, 1 year later, 31st December 2020, would we be in a similar situation? COVID-19 would be past, hopefully. Just now I was hearing this news on BBC when we are seeing flattening of curve in a lot of European nations. China is getting onto its feet gradually. So if we give the economy another 6 to 9 months, do you still reckon that at that point demand will start to pick up? And then if you think that if your company has survived that long until 31st of December 2020, then the future is very similar to what you saw on 31st of December 2019. And then if the stock price is down like 20%, 30%, 50%, then what should you be doing? Should you consider it value if it survives until the end of this year?
Yeah, and so these are the questions absolutely kind of think through. I think, as we discussed, a lot of people just looking at price, but what you said, Ashish said exactly the right things. Yeah, Peter, go on.
I was muted. Yeah, you're seeing it, aren't you, in certain sectors that are the most exposed. So you're seeing it in restaurants, obviously in the UK, that some have started to fall already. Those are the most debt. And of course, in the airlines, there's a big bust up because those that have built up some reserves, like British Airways, don't want the other ones to get bailed out. So it'll start off with those companies, won't it, which are being hit the hardest, the most quickly. And presumably in more sectors, there will be companies failing that didn't have much reserves. So the question then is, do we move towards a business pattern whereby, a bit like happened to the banks after 2008, people generally do start to keep more reserves and don't trade quite as much on the edge as they have been doing for the last few years? We're going to witness a bit of a sea change after this.
Yeah, makes sense. Okay. Rob, go on. All right, I'm not sure. Rob, did you want to say something?
Ryanair have 4 billion. Sorry, can you hear me now?
Yeah, we can hear you now. Go on.
I was just looking at Ryanair and their last trading statement. They're sitting on 4 billion in cash, and they own 77% of their fleet. So they're sitting in a very good position, and obviously they have low overheads, and they're very ruthless. I can see them charging premiums when people are flying again, which I expect I'll be paying, no doubt. So, you know, they to me seem to be a good bet. Their share price is down.
Yeah, so I mean, yeah, you've done your analysis and you think it can survive all of this, and then as other airlines might fail, they have the pricing power with you. Yeah, okay, let's move on. So guys, again, just sharing again for anyone who's not looked at it, you know, what is value investing? And the key thing here is kind of having some kind of margin of safety. So, you know, if you think there is, based on your value, you know, you know, it needs to be lower than what you think is the intrinsic value. And right now in this scenario, you might see that some of the popular things are super expensive when you kind of look at this. And if there is no margin of safety, then you would typically not invest. Another thing we discussed last time, and I want to share, you know, what we had, which is that going into recessions, historically, last two recessions, the interest rates were pretty high. And so the governments could reduce interest rates. But now going into 2020 and things going down, the interest rate is already quite low. And, you know, the tools that central bank would have are, you know, much less than what were there in the past. But then again, you know, we saw the Fed buying junk bonds. So I guess this time is not different, it's the same. Any thoughts on this, the interest rate cycle and where we are compared to the previous recessions?
I think to me, the statement of this recession is, I think the Fed chairman saying we have unlimited tools available to us, or something to that effect.
Yeah, crazy, yeah. The other thing you can do is just to kind of quickly show let me just share my screen. We have a lot of, you know, so if you go to cityfalcon.com meetup, we have all the historical presentations, and we also have a sheet that basically talks about everything we discuss. So this is the sheet, you have access to that, and you can look at ideas that we kind of put together. A disclaimer that not everything listed here is always a buy, but there are things that we were just discussing. But we put everything down here so we can compare. So from the first idea of Yandex back in 2015, which is done 180%, to you know, some recent ideas. Dimitros talked about Smart Sand, which has gone down 60%. So what you could be doing is, if you are interested in this company, you can go to our website and you can download the presentation from here. So, you know, Smart Sand value stock. And then I could also connect you to the people who actually spoke about this. So this is one way of identifying opportunities within our community. And you will see that a lot of companies have failed. So you will see, I mean, Laura Ashley is interesting, right? I mean, it's a brand, probably has some value, but it's down 99%. We saw similar issues with Debenhams, for example, in the UK. So you will see a lot of opportunities here that you might want to do some research on. Restaurant Group was one that we discussed in the UK, down 87%. Yeah, AMD has had a phenomenal run in the recent years. And even now. What else is there? We had discussion on Intu Properties. It's down 80%. That's crazy from August. So as someone said, you know, there are some pockets where you can see value, and this is where we could be looking for ideas. And let's get back to this. Another thing is, you know, we could be looking at outside the US, because I mean, obviously US economy and US interest rates and the dollar and all of these have impacts globally. But, you know, the stock markets outside of the US may not have moved as much as in the US because of maybe, you know, not the same amount of tools deployed by the country. So if you look at, for example, This is the FTSE. So no, wait. Yeah, this is the FTSE versus S&P 500. And you see that the FTSE is down 25%, while S&P 500 is down only 13%. So again, you could be probably looking at, again, we're looking at price action here and not necessarily value, but this could be a starting point. And then you can look at, you know, stocks and indices and see if there is any value there. Similarly, you know, I mean, India is where I come from, so I track that. It's down 25%, and we've seen, you know, the banking sector, especially having interest from China and other places. So it could be, again, you know, interesting to see outside. Similarly with Italy, obviously, you know, down 26%. If there are any opportunities here. So is anyone looking at any other markets outside the US for opportunities?
It's definitely.
Yeah, go on. Sorry. I think we lost him. Anyone else?
I think it's quite interesting to look outside, definitely. I think maybe actually just a question on India especially. I think that's of course predicted to become quite an important country in the next 10-20 years as well. I've at least had a difficult time figuring out how to actually buy Indian stocks as a non-Indian citizen. Any tips or thoughts on that?
Yeah, go on to that.
No, I was just going to say that you, if you're not an Indian citizen, you cannot legally buy individual stocks. You can invest through mutual funds, but not individual stocks. Or there is a way called participatory notes, but I think it only works with institutions. So, and I'm not exactly clear how that works.
Yeah, I think mutual funds is one. I think the other thing you could also look at is ADRs or GDRs. So Indian companies that are listed in the US and in the UK. I don't know if there is any ETF that you could, I think there is one ETF which tracks the index, but yeah, these are limited tools, unfortunately, right now to invest there.
There are India dedicated funds as well that you could buy offshore.
Okay, thanks.
Any other opportunities, markets that you think you're looking at, something that we can discuss in the future sessions?
I think an interesting comparison I was just looking at was kind of the price earnings ratios of different markets, and I think US is trading currently at something like 21p or so. I think if you look at, I was looking at just some emerging markets, which is maybe 40% China and then rest of the world, an ETF. And I think the price earnings there is something like 13, 15. So it's significantly lower still in the US. Any thoughts on, is that value or is there typically just a really good reason why that is?
Sorry, is that a question? I'm not sure.
Yeah, I'm just noticing that indices outside of US can be trading at significantly lower value, at least if you look at the price to earnings ratios. And obviously some of these markets are potentially even growing much faster than developed markets. So it looks like there's quite good value actually to buy outside of US and Europe and so on. Any thoughts on if that's the case?
Yeah, agreed. I mean, if you're thinking of buying, yes, that's what I would buy at this stage. But personally, I'm still waiting, trying to, let these uncertainties run out. And then even if it goes up a little bit, I'm happy to buy at that point. Yeah. Anyone else? Charlie, go on.
Yeah, I was just going to say that I've been looking at esports recently. So with I think it was a theme that was esports was growing a lot before the lockdown, but with the lockdown and obviously live sports just not happening, I was reading how like the growth in esports has gone up a lot, and also how Call of Duty is like a recent game that was launched, and in 10 days it from its release it managed to get 30 million players worldwide, which I think was the fastest or the fewest amount of days to reach that milestone of any game. So I found that quite interesting, and just trying to look around esports. So I know like Activision Blizzard's been doing quite well recently, and some other companies like that.
Yeah, I think most of these companies have done phenomenally well. But Charlie, what's your view after this? So let's say we come out of COVID-19, and then do you think more people would want to go outside given the situation now, staying indoors and, in front of the screens for so long?
Yeah, I do. But I think that like esports has been even before COVID, it's been an area where it's getting more and more popular, and also just generally it feels like it's becoming, the ecosystem is becoming more professional. Like I know there's now like esports, like the British Esports Gaming Association. There are World Cup tournaments for a lot of these games. There are players who are winning, millions of dollars in sponsorship from winning these online gaming competitions. And I think, yeah, maybe some people will move more outdoors, but I do think that like the growth in esports is just gonna go up and up as it kind of becomes a more professional ecosystem. Have professional teams, and you can make transfers between teams. I mean, yeah, I think it. Yeah, I think it will grow.
Yeah, please share some ideas if you have them. Yeah, it's a good point. Yes, Siddharth, go on.
Yeah, I was just wanted to share an anecdote about these esports and a lot of tournaments that are taking place. And I was actually working with a government organization that is responsible for the regeneration of area around the Olympics Park and the stadiums. And one of the stadium is a small indoor one where you have boxing matches, basketball, netball. And with all Olympic stadium, around the world, the issue that they face is that after the Olympics are over, there's nothing that happens over there. And here we are trying a lot to revive them, keep them active. And one of the, sort of the biggest demand that we were seeing for the indoor stadium was to hold these e-gaming tournaments there. Yeah, unfortunately, it was not because it's not a physical sport, so it was not aligned with the values of Olympic Stadium and the facilities. So they did not get an opportunity to hold the tournament, but the demand was immense as compared to the traditional indoor sports. Yeah, just something that I came across myself, and yeah, there's gaining a lot of popularity around the world.
Very interesting. Thanks for sharing, Siddharth. Okay. Let's move on. One other area that I'm looking at personally is the impact on online advertising market. And this is very close to what we do at City Falcon. So I did not want to spend any advertising money online from the funds that we had raised because the pricing was crazy. Google, Facebook, Twitter make you compete for keywords with other players in the market. And now suddenly the market has changed completely. And trying to figure out the dynamics. So, we're looking at a much bigger online audience than before, more people using online tools. So much bigger market for even Google and everyone else, but less people marketing at this stage, mainly because, like a lot of industries can't really market, be it airlines or other things. So that's happening, but also we're seeing change in the market. So for example, I get ads for doing online yoga or online sports, which you didn't have before, or I think esports is another one. So how this profile changes, and right now for businesses is great because the cost of acquisition is quite low, and then also based on this, which are the platforms that could be in demand going forward. So this is my kind of research area at this point. Anyone has any thoughts on this? And just one thing I'll say is, with all the estimates that are coming out, you might see a significant drop in the earnings from all of these giants, Google, Facebook, and Twitter, who typically, I mean, especially Google and Facebook, who are, generating so much free cash flow, might now suddenly see that, that's no longer the case. Any thoughts from anyone? Okay, now let's move on. I mean, the themes we discussed last time, and we discussed in Jan as well is, we talked about remote working, we talked about entertainment, online only services, healthcare, essential services like supermarkets and stuff. And then again, we are seeing a lot of people talking about climate change, eating less meat or focusing on lab meat. So these are kind of themes that I am personally tracking as well for my portfolio. Sorry, I'm running through this. So if anyone has questions, just raise your hand, just because of in the interest of time. My personal strategy right now is, as I said, wait and watch. I have shorted companies, but I'm a little bit nervous with what the Fed has done, but maybe outside the US. Companies with strong balance sheets, yes. And then, things like oil and other things that I'm looking at, indices, not necessarily value investing to that extent. And then hedging positions with futures and futures options and wicks. Yeah, so I think at this point, I think this is what I wanted to cover. Any questions from anyone on anything we've discussed? Okay, not much. I mean, I just wanted to quickly, and it's a bit of a marketing plug. So if you decide that you want to, leave the webinar, I won't be offended, even though I know most of you guys. But I just wanted to quickly show you guys how you could leverage, our platform to, if you want to track, any information on COVID-19 or anything else. So this is what our watch list looks like on City Falcon. So this is my kind of value tracking things that I'm tracking on the watch list. So what you can do is you can add a long list of things, up to 200 items of what you want to track. And it could be complicated, like you could be saying something like coronavirus and vaccine, for example, right? So you could be creating your own kind of custom queries, or you could be just searching through different things. So we cover a lot here, be it regulations, be it anything else. And so you will see one relevant news coming from, I think, about 5,000 sources now from all around the world. So you're always informed. And if you really care about real-time news, what you could do is you could turn this into latest, and you will see something is from 5 seconds back. So if you're looking for trading, you're looking for opportunities, you can find some, and this is a news article that you can read. So you can just open and I can read this article just like Google does. And then we've got a lot of other tools. So for example, if you want to see what is trending right now in the markets, you see Bill Gates is quite popular in the news right now. And so you can quickly click on Bill Gates and you can see why he's popular. So someone's accusing him of something, or he's not happy with Trump's decision, but he's popular right now. Same with, for example, Goldman Sachs. So Goldman Sachs announced the results today. And so you can read more about why they are trending. And if you want to read more, you can click, on see more stories. Another thing we do is with machine learning and natural language processing, we can differentiate between what is Goldman Sachs news and what is research coming from them. So if you want to know, I mean, some of it is, not always accurate, but if you want to know their views on things, so let's open, I've opened it here. So if you want to know what Goldman Sachs is saying in real time, you can get that. So for example, they're talking about oil, which is, their view there, or Tesla got, a buy rating and, the stock is going up, or it downgrades certain companies. So you can see live content coming through. And this is not only from Goldman Sachs, but any kind of research house that you might be tracking. So you can select which one, or what you could be doing is you could be tracking all the ratings. So let's say, for example, you want to see, strong buy ratings. Oh, sorry, where am I? No, in the wrong section. So this is kind of the full coverage of things we cover. And within that, we can identify what we call events. So over here, let's say I want to do and strong buy rating. So if some company gets a strong buy rating, especially now, so you can see, this company got upgraded to strong buy. So all of this information is available. And, we have a discount code if anyone wants to try the silver version. So you can use it for free and you can add up to 5 topics here. But if you want more topics, you can, just reach out to me. I'll give you a code. You can use it for free for a month. And then what we also have is premium content. So if you want more than this content, we get content from The Economist, Washington Post, all of this without paywalls. So there's a subscription you get for $14 to $19 a month. And then you get access to we're saying 225, but we are more than 500 publications now. So everything from Fitch, Benzinga, Forbes, and all of this content opens within the apps. So you don't have to go to another site, be worried about the advertising, the clutter, all of that. And then we have mobile platforms. So sorry, I'll stop with the marketing plug now. Any questions on any of this? Anything that you wanted to track that we can help you with? Go on, John.
Dealings in all that information as well.
Sorry, John, we may say that again, please.
I just wondered whether you list directors' dealings in your own companies in that information as well.
So not yet, but we're looking to add that in. And then we also have, if it's of interest, we'll soon have the RNS feed from London Stock Exchange, and then SEC filings and all of that. So the idea is that we want to make this platform just like you would have Yahoo Finance or Bloomberg, but at an affordable price and with all machine learning tools.
And is that information available to download if
yes,
the APIs for it and that sort of stuff?
Yeah, so we have an API that, and we're going to open it up from, so we have big banks using us, but open it up for personal use as well. So you can download it into Excel or Python, whatever you prefer. Absolutely.
Brilliant, that's really good.
Yeah, so I mean, if you just go, like if you want to access our APIs and pricing information, if you go on cityfalcon.com, on top you have enterprise solutions, and then you have financial news API. And then we also have very transparent pricing on API. Also, what we can do is we can give you historical stories. So for example, you say, give me all the stories on S&P 500 for the last 5 years. And we can give you an API, so you can download it in Excel and you can work with it. Yeah, whether there's a question in Q&A. So it's from Gagandeep. What is your view on how tourism has been impacted and whether it will survive? With tourism, I think there's a big concern, right? Because I think countries are not yet ready to open up the borders. And even if they do, they might have this, 14-day quarantine period or whatever, at least in the short to medium term. So I think economies are struggling. So I'm sitting in Malta where, tourism is a big part of the economy. And I'm not sure if at this point it's going to be opened up. Anyone else has any thoughts on tourism? All right, cool. All right, guys, this is it from us. So we'll take the gift of time, 15 minutes to go. We're running the same session tomorrow if you still wanted, if you're still learning and wanted to join us. And then from next month, we'll also try and do some basic investing workshops, like we've done investing for newbies, where we go through, basic ratios, basic principles, all of those things. Yeah. Any questions or anything before we close? I guess not. All right. Thanks a lot, guys. Have a lovely evening. Ciao. Bye.
Thanks very much.
Thank you. Bye.
Thanks, guys. Cheers. Bye.
Thanks, Usvi.
Bye.